Sound check. Sound check. Give me a nod if you can hear me. We'll get started. Thank you, guys. All right. Good morning, everyone. It's 6th, 2026. New day, fresh start. All right. Welcome to the morning game plan. I'm Manny. The purpose of this show is simple: live futures trading, real-time technical analysis, and actionable trade setups, all with the focus on building real trading skills and education to drive consistent profitability. Every morning we'll come in with the same goal: to build out the structure before the open, so we're operating in alignment with today's dominant forces. All right, guys, we're going to do as we do every morning. We're going to dig into the higher time frame, right? And there's really not much to talk about. We have this kind of this flag pattern. I mean, I read yesterday someone mentioned that this was this negative outside 4-hour print, and he was really excited about this being the top, that this move was the blow off. This is not a technical bear flag pattern. A bear flag pattern would look more like coming down, and then it would come up this way, and then wait, I have a timer on this thing. Let me turn that off. So bear flag would come down, and then it would come up like this, right? But in any event, bear flags are really poor, have a really low success rate, only about a 45% chance. And in my experience, I'd love to trade them because I love to trade their failure. I love to either try to catch a scalp long somewhere in here or on the reclaim of that level. All right, let's talk about how we're gonna approach the day. And for that, we're gonna move over to the 15-minute time frame. Build out the most bullish scenario, the most bearish scenario, and then we'll talk about the bearish trap trade and the bullish trap trade. We're getting close to the open here, so let me just get going. All right, team. So coming into this morning, right? Pretty much we know we've had this really strong rally off the low, and now we're consolidating and we're going sideways. All right. So in order for this to be bullish, pretty simple, right? Our overnight high is 77.75. In order for us to see a bullish pattern or a bullish continuation, a breakout, we want to see price at least get above this most recent high, 77.67, break up, right? Pull back and hold this high. At that point, we want to see consolidation pattern. We want to see, buying wicks. And at that point, we're entering those long trades with our stop somewhere below the most recent local low, and we're looking for a continuation to the upside. The bearish trap, the bullish trap trade would be very similar pattern in that we would go up above the overnight high, and instead we would fail back below within the overnight range, and then maybe stay back in the overnight range for more consolidation throughout the day. All right, and so now let's talk about the most bearish scenario. Well, that's pretty simple, right? Because we've built this really good shelf here, 77.41 to 45. All right. So if we get a break here lower and then price tries to reclaim that area and is unable, then we're looking for shorts, scalps down to the downside and looking for further move to the downside. Once we get into this pattern, I mean, it would be that's really a tough read, because this is just poor structure here. We'd have to really put on our hats and see where price could stop. But in the event, it's good to have a trade plan in these times. The bearish trade is very simple. We go below, we reclaim it, we come back up, and we move to the upside. All right, price is opening here. Let's dig into we got a screenshot. I hope you guys had a good evening. Nice time away from the charts. It's always good to get away and decompress and release all those cortisol levels. Think about what Danny talks about. That's always good stuff. And it's good to de-stress. All right, let's see what we have here. All right, so I got one target at 57 for 5 points off of the set support buy number 1. That's off the market blueprint. I posted it in both rooms. That was the support buy at 77.46 to 77.51. Okay, and that was a That was our setup number one. All right. So it looks like it's coming down pretty hard against me now here. I'm not going to stick around and let me see what traded on the low. 77.50. We have 50 contracts traded. Yeah, I want to tighten this up. I'm just going to go ahead and take the base hit right here and end is it that. All right, so I got +5 on the first, -2 on the second. And I'm just closing it out because I think we could probably get a shot, another chance at a re-entry. It looks like we're printing a pretty large wick, but you know how the ES loves to deceive, right? So let's just see what materializes here. And just knowing that this is a support. We have yesterday's regular trading hours low at 77.45.75. Guys, if we get down there and we sweep that area, we know what we're looking for down there, right? Here, let's blow it out a little bit and let's just talk about that. I kind of need like this chart here. Let's see if I can blow this up this way. Okay. All right, so look, we have a negative outside bar on the 5-minute, right? Pretty bearish stance here. But we have our regular trading hours low from yesterday, 77.45.75. All right, so if we get below here, we're going to be looking for continuation, right? That's the bearish scenario. Let's see if we get a continuation move down to the downside and continue. Maybe this bear flag does break out to the downside. Maybe this is one of those 45%ers that does break out to the downside. At that point, we're looking for these lows to hold, and we're looking for that move to the downside. All right. It's a pretty aggressive move here, guys. I'm glad I took that exit. I'm glad I took the graceful exit at -2, I think, on the second. But in any event, I'm moving over to the trade plan. Let's see what that has for me. Let's go. Where are you when I need you? Okay. You know, I was so busy this morning, I forgot to load the levels into where I normally have them front and center. Let me get that. Give me 2 seconds, stand by. Let me see if I can get those up. Where are you? Market blueprint. How was your guys' evening? Did you guys have a good relaxing evening yesterday? I did a lot of nothing yesterday, which was pretty relaxing. I like those evenings. All right, just about done getting those levels in. 77.47, 77.96, 78.01. Huh. Interesting. Very interesting where we are. See if I can get those loaded here. Okay, great. All right, so we're at this level here. Let's see if it holds. 77. Wait, let me just. Doesn't look right. So let me ask you guys questions. How did you guys make out yesterday? I know yesterday was pretty. It got pretty mundane into the afternoon. I had a valid setup in my breakdown short, and I took the trade and I was short in like right here at this print. Let me just show you. So I was short right here on this bar, and I sat through all of this, and then I just, when it came back up here, I covered it at break even, and then it broke like 15 minutes later. I had to leave, so I just walked away. But anyhow, I thought I'd share that. Funny enough, right? Sat in the trade for 3 hours, and then I had to cut it because I had to leave. All All right, let's see what we have here on this time frame. Make sure we have the right call here. We are at 77.47. Yep. All right, so we're looking below the overnight. No, let's see if we can get the reclaim, guys. Looks like we're reclaiming here. All right, so we're back above the overnight low. Let's wait for see if we can get some acceptance and get a move to the upside. I grabbed some at 77.52.75, just a small bit just to get a probe on. Probing order. Looking for 62.75, obviously on the second, and a narrow miss. I have a. Let me get this up here. There we go. Narrow miss on the upside target. Pretty strong. Let me just get this stop in. All right. So we can get some follow through up to 77, 62.75, and then up to the pearly blue yonder at 77.67.50. I'm looking to exit on. I'm looking to take the first scale on any sign of loss of momentum here, but it look gauging by the price action, it looks pretty strong. So I'm sticking with the trade for now. Let me know what you guys are seeing there. If you guys caught this, let me know. Looks like we are losing a little bit of momentum, but 77.59 looks like they traded very strongly into that area. So I would not expect that to be any type of anything more than just a pause, but we'll see. I may have to just take some profit on this one, or at least de-risk it in case we do go back down and sweep. Let me take a look at what the low looks like. Yeah, that was 77.40 was pretty important down there. Let's see if we can get some follow through on this. Would be nice. See what we're running into here. Okay, it doesn't look like anything meaningful here. Again, let me know if you guys have any questions. Narrow miss up there and came right back in on me. Let me take a look at this higher time, this other chart. I might have to de-risk this. Let's see. What am I looking at here? It's a pretty gnarly print. I'm going to de-risk. I took -2 on one. Unfortunately, I didn't get that fill up there at the high. Yeah, looks like I'm going to get stopped out on this. What is the tick doing? I think it's just normal. All right, -5 on that. I just got taken out. Stop got elected. Not too much I can do about that. Sucks, but I hate to start the day off with a loser. But you know what? It happens. So I think what we need to be on alert for here is that this market may not be ready to have a directional move. I think that's the read here early on. I'm willing to give this another shot simply because of the structure. So I might give it another shot. I don't know. It is a valid setup. Have price and time. let me just wait. What time is it? It's 9:41. Let me just give this about 3 or 4 minutes. Maybe I'll just probe it with one. Just so I have one on. Now look at that, came right back up. All right. Oh. Let's see what this is looking like. We got this fib cluster of resistance here, but I got one at 77.52. I'm hoping that it was a retouch, but I did take -5 and -6 and -2 on the first couple. So yeah, not a good start, not a great start to the day. I'll be right. Not the way we want to start. Again, that's the great time to bring this up, right? So right now, so typically I'll speak of using stop loss protocol, right? And stop loss protocol is simply if you have a stop that it's kind of a tool that I created to help me to prevent me from revenge trading or making emotional decisions. And so at its inception, it was every time, I had a stop loss, I would step away from my screen for 10 minutes and I would sit around and I would review, right? I would just make sure, because at that time I was struggling so much that I had to do that. But then as time elapsed and I started getting a little bit better with my system and just overall just better grip on my emotions, what ended up happening was I started to identify that the real purpose of the tool was not just not every loss was the same. And what do I mean by that? So what I mean by that is that what I realized was that I only needed to do it when the stop affected me, like on a personal level. And so if I'm bothered, you'll often hear me say, "Gosh, that one really sucked," and then that's when I don't feel good. You get that feeling in your stomach, and it's just like, oh, you're not feeling good, right? That's the important part to identify. That's the one that I want to identify. That's the feeling that I know leads to poor decision making. And so those are the ones that I will step away and I'll just go clear my head, because to be honest with you, I don't really want to be in front of my desk when I feel that way. Does that make sense? So yeah, stop loss protocol is really about identifying when a trade negatively affected you and then stepping away, because that type of mindset or that type of thinking leads to poor decision making. Getting some follow through here. I was back in. This is one of those trades that just took 2 tries to nail it. Yeah, Bruce is it's so important, right? So it's like about that feeling, like, and what I started to realize was why am I forcing myself to sit here? I don't like what just happened. I feel rotten about it. All right, coming up into yesterday's close at 77. No, that's not yesterday's close. That's wrong. But I feel horrible about it. So why am I forcing myself? It was like I need, and then if you really dig into it, what's happening is +5 on one, taking the 5 points here. Just want to be mindful of the earlier drawdown, but I also want to be mindful that I want to try to hold this. If we extend above here, there could be a. Yeah, you see, it doesn't want to go yet. With the so let me just finish what I was saying about stop loss protocol. So what I realized was that there are times where I would sit here and I didn't feel like being here, but I would force myself to be here. And what that was me trying to trade myself to feel better. And needless to say, that rarely ends well. All right, because at that point you're simply trading your emotions. All right, so it's a good tool. I suggest if stop loss protocol doesn't really resonate with you, find something like that, and don't be afraid to acknowledge that. Hey, you know what? That felt crummy. I'm going to step away here because all right, coming into that second target, let's see if I can get it. Got it, plus 10 on the second. So I got 5 on the first, 10 on the second. And now we're in a runner, and let's see what this can bring us. Now, you guys know, right? Look, the first thing I'm going to look at is going to be my trade plan. And then I'm going to look at time. Right? I want to see where am I on today's execution clock pattern. So with that being said, we have a high coming in today at between 10 and 10:45. We are in the front half of the window. And heads up, I announced it in the pit this morning. I'll post it here too, but I'm sure you guys saw it. Tomorrow at 1 o'clock, the long-awaited, execution. So I'm bundling it together. With a prop trader boot camp, as well as the execution clock. And I was working on it last night. I put the final touches on last night. It took me about 3 hours, but really happy with it because sharing these nuances, and maybe I'll acknowledge that. Thanks, Bruce. I'll acknowledge that, that I've been promising it for a while. And I feel bad because I know that when it took me a while to learn it. And we're coming into yesterday's point of control here. So let's see what happens. Price will probably stall here. There are probably some stops above here, but really what we're looking for is that most bullish scenario for any continuation longs. If you're flat, here's our next setup, right? So we have that ledge at 77.67. So if you're coming into this flat and you're waiting, right? We have 77.67, and then we have the overnight high. Okay. So what we're looking for is for price to close above with strength and momentum, and then any retracement that starts to wick towards the back half of that candle print, we're looking to enter our long positions, and then we're looking to judge what the local low is and use that as our risk marker. All right. So that's the next setup. So back to the clock, I realized that it's so highly nuanced that it can almost, for at first, it probably doesn't make much sense. And then afterwards, once you kind of understand the broad side of it, the fundamentals of it, the next layer that I'm going to teach and show will really help you identify or gain an understanding on how to employ it, on how to really apply it to your trading. And I'm super excited about that. I think that's just going to be such a value add. So hopefully you guys will be around for that. All right, so price is stalling out here as expected at 77.65. You can see it. This is yesterday's volume point of control. Okay. Yesterday's volume point of control is the volume point of control is the single price with the most amount of volume for yesterday's session. Now, there's a caveat with that, in that this volume point of control, some people look at the volume point of control for the regular trading hours, and some people look at the volume point of control for the entire session, meaning the Globex session and the regular trading hour session. I used to look at both. So I used to look at the 24-hour, and then I used to look at the regular trading hours. And what I found was that there's value in looking at both, right? The price reacts at both. And I have another chart here that I can use to monitor both of them. But what I realized was, over time, if I had to pick one, then I wanted to have the 24-hour. So here I have a profile chart here, just minimized on my other screen, that I can't squeeze onto the screen. How many of you guys have a profile chart on your screen? And do you guys and do you know about? Sorry if I assumed again. I have to stop doing that. But how many of you understand what understand market profile concepts? Okay, good. So, yeah, market profile is such a fantastic trading discipline. I mean, so for me, it was pivotal. I'll give you guys a rundown. So here's how my learning journey went. I first learned classic technical analysis, Edwards and McGee, classic, support resistance. I thought that was the holy grail, right? That was my first endeavor into trading. Then I realized, or I thought at the time that, well, this is not the holy grail. Where's the holy grail? I was looking for the holy grail. This was very early. And so from there, I started hearing about Elliott wave, right? So I started to learn Elliott wave. I bought Prechter's book. And some of those concepts are still useful to me today. I still reference them sometimes. Look, so I still keep them right here. So this was my first learning one, technical analysis of financial markets. This one was not. I had two copies of this. This one was really doggy-eared, and then I spilled stuff on it. But this just goes through like classic, like chart pattern stuff, and it really gets into the theory of it. So then I went into Elliott wave. So I read Frost and Proctor, right? And this one, you can see again, it's just doggy-eared, and so the learning continued, right? So then I knew technical analysis and I understood wave structure. So then I started to be able to count waves, which was super exciting. And then after that, I realized that, so with Elliott, so technical analysis is probably better if I had to pick one, because technical analysis was more applicable to daytime trading. But I first went through classic technical analysis, like you just saw, and that's Edwards and McGee and John Murphy's book and anything I can get my hands on. Then I learned Prechter, Frost and Prechter, Elliott wave, and then I remember I learned DeMark. I did DeMark's indicators, and this one, to me, honestly, I just never got much out of it. I just couldn't find a way to employ it. After DeMark was when I learned, was when I was introduced. It says, I find Elliott wave hard as I never know where the count of the wave starts. Yeah, so it's really, so Delphine, I completely understand you. So I only use Elliott wave for higher time frame structure, right? So you'll see here on this chart, right? This is my Elliott wave count, and it gets a little bit more granular, but it's just it gives me the higher time frame structure. It lets me, I really just want to know, am I in an impulse wave higher? Am I in a wave 3 impulse? Am I in a wave 5 impulse? Am I in a wave 2 pullback? Am I in a wave 4 pullback? That's really what I want to know. And it's a broad stroke, you know, you never know, and it's really not applicable on the daytime frame. So after, let me see, this thing's pulling back again on me. Hang on. Let me focus on this trade. Blow this out a little bit so it's more visible on the screen. I have my stop 2 ticks below break even. Okay, so after the mark, why don't I share all of these with you guys? So after the mark was when I was introduced to markets and profile. And that one was a game changer for me. Where is it? So markets and profile changed the game for me. This one was like, if I'm teaching someone how to trade, I tell them, hey, you have to learn basic technical analysis, and then you have to read this. It frames the market as an auction. You start to understand balance. You start to understand a bell curve. Bell curve is really important to know, to understand. So what I'm concerned with, just let me get back to the live price action here. So what I'm dialing in on is, hey, the inability to move higher. So we're just going to continue in balance here. No need for me to risk anything on this trade. That being the case, I'm also now at the front end of my window. Okay, so I am now about a minute into my window. I will be in a minute. Let me just take a look at some of these oscillators. So we ripped higher, exactly what I expected, right? So dips will be absorbed, but is the mark? Are we going to change? Are we seeing a regime shift? And they started yesterday at about 12 noon. Okay, so it wouldn't be out of the realm of possibility. It wouldn't be completely, you know, it wouldn't be like out completely unknown or just a foreign concept that we would continue to digest that 2-day move, right? That doesn't sound like anything that would surprise anyone. So I think what the focus has to be now, let's just get off this trading chart and just focus on the pure price action, is, are we going to break out of balance? Right? Is this balance area going to break? Well, let's talk about what that would look like. We went over it a little bit. I'll just go ahead and review it. So again, price would break above with strength and momentum. It would not be doing what we're seeing right now. It would not be stalling. So this is a balance area until it's not. I think we have to be respectful of what we're seeing and continue to trade the balance area until there is a breakout. So now the way I'm approaching this position is any retest of this high that stalls, and I don't think this high is the high of the day. However, what I'm on alert for is, are we going to just come up, fizzle out, and come back down and come into balance? One of the concepts that I'll be covering tomorrow is what each day type, in terms of the execution clock, each day type and 4-day pattern follows a specific, has like a specific characteristic. So right now, and this may sound wacky to you, but we are today's execution clock. We are in the S2H day. So that is typically that's a bearish price pattern. So let me just draw it out for you here. I can get into this stuff earlier because, tomorrow you guys will just have that much more understanding. So a normal or a standard S2H day would print like, oh my God, I just drew it here. All right, let me just redraw it. That's pretty funny how I drew it without even thinking about the lesson, but it's important. So let me just get that up here. I worked on some charts yesterday and I put them together. Let me just show you these. I'm gonna have these in the presentation tomorrow, but this is what an S2H pattern would look like, right? So here, let me draw it out. An S2H pattern is typically a bearish pattern where you get a strong open, right? Like what we're seeing now, price fizzles out, and then often, let me just watch this position, see if I want to take this off here. Not that. Move that off. Yeah, you see we just came up again. Oh, did I miss the shot up there? Did I take it off? Yeah. I think that was a prime cover spot right there. Let's see. Give it another shake. What are the oscillators saying? Yeah, we're losing momentum here. I don't know. Oscillators are really low on the hierarchy for me, but I do not that. Yeah, we are losing momentum here though. Makes sense. Okay, so let me finish this pattern. Sorry guys that I keep tailing off. I just need to monitor the position. I'm sure you guys can respect that. All right, so an S2H pattern. Let's see if I can write this with the pen. S2H would be like this. We'd open up very high. That would be our AM high. We would put a mid AM low in. Again, this is in a perfect world. It would be a lunch high, an afternoon low. I guess this might take profit here. I'm going to hold. Okay, an afternoon low would be here, and then we would put in another rally and then tail off. So this would be our high. For the early session, this would be our low. This would be our high. This would be our low. This would be our last hour high. Do you guys have the plan? If you guys have the times open on your if you have the plan open, you'll see that this is it fits the time frame. So this in the morning at the high, this would be our AM high between 10 and 10:45. So this would be our mid AM low between 11:40 and roughly 12:30, 12:40. Then our afternoon high, our AM high, our mid AM low, this would be our afternoon high. So this would be our 2:30 high. I gave this an extra leg it doesn't need. Oh yeah, I needed to leave that in there just to form the high. Okay, so AM high, mid AM low, 2:30 to afternoon high, last hour low. Forget this. Don't look at this is wrong. I only needed to put a pivot higher so that you can see the low, so you can visualize the low. All right. So you can see that often on an S2H day, the early morning high can often be the high of the day, especially if we are in a downtrend. But we have these days where the market is right now. We are not in a downtrend. We are in a strong uptrend. So the fact that we are in a strong uptrend, price is everything. So what we need to focus in on today, what will be most important, is what is the relationship of the AM high to the afternoon high. What is the relation of the mid AM low to the afternoon low? Because the pattern can alter, right? In a strong uptrend, here's what we can get. If we come up and we put our high in, we get our mid AM low, and then that 2:30 afternoon high is higher than our AM high, then we're going to break out. It's going to probably, the last hour low will probably be a good scalp long. So again, this is an alternate pattern. This would be our high. This would be our low. This would be our high. Low. Okay. The most important pivot on an S2 day is the afternoon pivot, the 2:30 pivot. I'm just using the center time. It's going to be most important. So coming into today, we are in a consolidation sideways. I'm willing to give this trade a shot to see if we get this pattern on the right, the low probability pattern. But this pattern here is the expectation. Now, why am I willing to see if this breaks out? Okay, well, this has nothing to do with the pattern, and my decision has more to do with risk management. If this is going to be the case, then I am probably not going to have very many opportunities to trade today. And thus, I'm willing to give this a more of a chance, because I know that on an S2H day, often opportunities dwindle, and I don't want to trade a bearish pattern in a bullish consolidation. I mean, of course, I will take the trades if it presents. Price is everything, so on and so forth. However, I really want to focus on maximizing what I have. So every time I click that mouse, that is the point of the highest risk in my business. The less times I enter, the less times I click, the better off I am. So once I get a position, this is why I've trained myself to hold longer, is because I don't want to trade a lot, because with every trade that I take, the probabilities of success are reduced. The probabilities, I shouldn't say of success, the probability of average, the probability of expectancy of my trading system declines simply when I click and say it's a break even, I've lost the commission. So I favor trading less. And if I get a position in the morning, I really want to stick with it, give it every opportunity to work. Because if this position comes back on me and if this position comes back on me and it stops me out at break even, then at least I gave it the shot. And then if I'm unsatisfied with the return on the day, then what am I going to do? Then I'm going to go look for, then I'll see what the rest of the day might bring. So let me know if you guys have any questions about S2H day type. I really wish I went into a lot here. I wish we had more people in here. I know a lot of people are interested in it. This one is kind of more akin to what Danny does, but this was also a good book. The Inner Voice of Trading. It's pretty cool. Michael Martin wrote this. It's a quick read too. You can see it, right? It's a really quick. I think I read that in a very short period of time. Delphine said, how do you determine it is S2H? So great question, right? Because that's really where it's important. So let me dig into that. So you understand that we follow a 4-day set. The clock has 4 day types. Okay. So we have S1. Oh, I'm going to try to write this, guys. Bear with me here. I really want to get better at writing. David is so good at it. S1, S2, S3, and S4. All right. So Delphine, how do we know if it's S2H? Well, this is why S1, the first day, S1 day, my mentor who taught me this told me that if you're ever going to take a day off, make it an S1 day. Never take an S4 day off. And you want to be around on S2 days. S1 day is the day that sets the cadence for the next 3 days. Now, how do we know if it's going to be S2H or what day it's going to be? Well, we don't know until the last hour of the S1 day. I don't know what these next 3 days are going to be like until I see the last 2 hours of the S1 day, or would tell me what pattern will follow on the next 3 days. So it's a little ambiguous. I know it doesn't really answer your question, but that's the best I have. That's the answer. So I know that it is an S2H day because of what happened in the last few hours of the S1 day. Often there are a lot of people who not a lot of people, but so I was putting out the clock. I've shared it for a long time. Let me just see. The patterns repeat every 32 days. There is no reason to guess. Yeah, I don't know what that. I'm not. I haven't been able to understand that very well. This is the way it was taught to me, and this is what has been working for me for a really long time. So you can see here, right? Like I've tracked this. I've tracked this thing since I've been tracking the clock. I mean, on this one spreadsheet, it's like I think this spreadsheet goes back to 2021. MeJT uses the clock too, but he has a different kind of a different way of following it. I'm not too sure about that. But look, trading is really about what works for you, right? Find what works for you, get the tools, make them your own, and a lot of it is how you manage your risk, how you manage your positions. Okay, but you can see here, like I've been tracking this thing since this one goes back to 2023. The other one I had was the file got too big, but it was from like 2016 to 2023, and then the one before that was 2013 to 2016. I post them a week in advance. I used to do what Manny does now, but gave it up when I learned about the 32-day cycle. Yeah. Yeah, I think that. So in my opinion, I've followed that linear approach, and then I fall out of sync, and I come into an S2 day thinking a high day and it's a low. Again, if it works for you, that's great. That's fantastic. That's the way you have to. Again, right? Highly customized. You do what works for you. Find a good way. All right, coming into the target here, plus 10 points on the. So I added one contract, so I'm at 77.57. I'm going to take one off here for 10 points. I don't know what this fill was on this one. Let me just check it out. Execution. Let's see. I don't know what the fill was on this one. Oh, this is the original one from 52. So 52 to 67 is 15 points. I'm gonna go ahead and take that. So plus 15 points on that. So that was, I entered the position with 3, with 2, then I added 1. I took one off at 5. I took one off at 10. Now I took the last one off at 15. And then this is the add. So you can see here that I added one contract as we were speaking right on this, it was earlier. So I added into this pullback here as I didn't want to interrupt the conversation, but I added on the pullback to the moving average. Once we bounced off that moving average, it pinched and it rolled over and it started supporting it. It didn't look perfect at the time, but I kind of imagined it. And so I added it right into about here. So I did have to sit through through this candle here. So this is another good concept to discuss, right? So do you see moving averages lag on? So I use a 5-minute chart here on stream, because that's more universal to everyone, right? Most people, I found, I just Googled it, that most day traders use a 5-minute chart. And let me know if you guys, what's your anchor chart? But just curious, me, JT, what's your anchor chart? Is it a 5 or 50? My anchor chart was a 15. All right, I have bad position on this. I'm going to go ahead and step aside here into the 1020 mark. At least I'm going to tighten up the risk for sure. Let's see if I can give this a chance to work, but I don't really have I don't really have a resist. Oh, there it is. Yep, I do have a resistance. So I have a fib cluster here. Gotta get a little bit more data on this chart. So if I'm trading by myself, if I'm trading off screen, if I'm trading alone, not on stream, typically what I'm on is a 15-minute and a Renko. And then I have the smaller chart that I've watched I watch a tick chart because I use the PTG ATAs. But I'm typically on a 15-minute. I can see the 15-minute in the Indy 5. I can always see it because I'll just gauge it from the open. So I always know that, where's my 5-minute open, and then I'll start counting back. So it doesn't really affect me very much. But my anchor is a 15-minute. I'm curious. What do you? Anyone else? If you guys can share what you're using, I want to know what's most applicable to share. $5-minute and 1 hour. Good. Yep. So I really like the 4 hour, and then this is where I get really. I used to love I used to use the 1 hour just like that. And then I just fell in love with the 2 hour chart. I don't know why. But the 2 hour chart, I know basically that 2 prints is going to be a regular trading hour session. It just works. And look at this print we're getting here. Let's see what the 60-minute looks like. Thinkorswim is so good for charting. Yep. You see that? So we're flirting with that breakout. It's worth it to hold it with the stop at break even. Who knows? But maybe yes, 2 hours great. But I do like the 4 hour. I don't know. Yeah. So the 4 hour is it's just fast enough. A little bit faster than the daily. But this is where I'm getting. If I have a bias, it's from this chart. 4 hour chart. I like the 4 hour chart. Again, higher time frame is so important. All right, I just got taken out of break even. Just got taken out of break even on that one. So again, if we're following that pattern, right? Let's just discuss it. Let's apply what we learned or what we discussed this morning about the clock, right? And let's also review what our next possibilities are. Well, first off, right, we're failing at the breakout. We're still within this balance area, and it needs to be respected. Okay, it's a balance area until it's not. That's number one. 2, we have a pattern that suggests an early morning high followed by a mid AM low. Let's just draw it out with no bias, right? As I put it on the trade plan, it's on purpose that it doesn't have like a hierarchy, like a higher high or higher low. Then we're expecting an afternoon high, and then we're expecting an a late low, right? So this would be AM. Sorry, let me just write the times in. AM. Let's go put an M here for midday. I'm going to put in a L here for lunch. It's really 2 o'clock, and then an L here for late. Okay. So if this is what the pattern suggests, and based on a higher time frame, we have a long lean. However, that long lean is nested within a daytime frame bias, a daytime frame balance. Okay, so what do we know? So for our next setup, well, I don't really want to necessarily sell any high, because at any point that someone who thinks this is a bear flag, and say there are a bunch of people thinking that, and they're selling these highs, market makers, dealers, and positioning is going to squeeze the ever-living Jesus out of them, and it's going to move higher. So I know that I want to be aligned with those guys. So this gives me 2 opportunities to look at. So I want to look at this mid AM and this this afternoon, right? Because I want to be long based on my higher time frame, respecting the balance. I don't want to be short. I don't want to try to scalp this, because that's going to be a lower probability trade due to the higher time frame. So this outlines my ideas. This outlines my bias. Now, moving forward. All right, so where can I enter? What is a good entry point? Well, let's map out if you're using the market blueprint, right? Let's just bring that into focus. We are now at support buy number 1, which held this morning. 77.46 to 77.51, we understand is support. I mean, I hope it does break to the setup number 2, 77.31. I think that would be a fantastic buy. However, moving forward, we're going to respect that this is a balance area. So what I would be looking for next would be in the mid AM time frame. So in about 30 minutes, in about an hour, I want to see where price is. And if price is somewhere down here in the lower portion of my balance area, then I know I have a trade opportunity. However, I don't want to catch any falling knife, right? And I have too clear of structure to guess at a low. Don't need to guess. Let somebody else's money prove it. If a trade, look, this morning I bought 77.52. That's 12 points off the low. And it was no sweat, because we were on the right side. So if price does sweep into my support area, into my time frame, then at that point I'm looking for a reclaim of either this level or this level based on the daytime frame structure, and also based on the market blueprint telling us that this is support. This support has obviously been proved. It's true. So at this point, I'm looking for something like this, right? And then maybe I'm sneaking in on a 5-minute wick with my stop being somewhere below this local low. Again, then taking scalp. I already tried my big shot for the day. I'm in balance. It didn't break out. So on this one, Say my entry is somewhere around here. I'm looking to take my 5, 10, and being super flexible on any retracement, hoping to get 15 points. All right, I hope that makes sense. Let me know if you have any questions about that. When I designed my trading system, the trading system is based on trading 3 contracts and scaling out at 5, 10, and 15 points. And the data kept showing me over and over because I had to stick to some type of an exit framework in order to be able to judge the system. So in order for you to build any type of trading system or structure, you need to have a solid risk marker. So whether that's 5 points, 10 points, 15, what you need a hard number, and it can't be negotiable, right? It has to, or you can give it a range, but it can't be too wide, right? You can give it 5 to 7 points, 10 to 12 points. I've used both of those, 5 to 7 and 10 to 12. Then you also need a hard exit target so that you can then, base your research and your back testing on those numbers. So you know if you're using a 5 to 7 point stop loss, a risk measurement, and you're using an exit, a scaling exit, and you're using a scaled exit methodology. Switching over to 5 minute. If you're using a scaled exit methodology, well, then you need to know what it can be negotiable. It has to be hard. What's my target 1? What will that pay? Target 2 and target 3. Or if you have 2 targets or 4 targets, but you have to decide on a number. Once you decide on that number, then you start back testing. And when you test your data, now you have a construct. You can ask yourself, okay, so if I entered this trade, say my system gave me a signal right here at 77.54. Okay, so I'm long 77.54, and I have a max 5 to 7 point risk, which ultimately becomes 7 points, because when you're back testing it, you're just going to give it 7. I've been there. So 7 point risk. And then I have a 3, let's just say a 3 point target, a 7 point target, a 10 point target. You'll back test and you'll say, okay, did this trade hit target 1? It did. Okay, check. That reduces the risk of the initial risk. Did it hit target 2? If it did, check. Now you adjust your risk. Did it hit target 3? And if it did, you have a completely a successful trade. You got an A10 down there. It's a little early for it though. I might take the retest of that. Hang on, guys. Let me just look at that. I wasn't ready for it. Dang it. Let me get this thing going here. Bear with me here, second team. Okay. All right, so back to what we were discussing, back testing your system. So then you can go and test. Okay, say that you didn't get target 3, right? So you got your first target. I'm going to use my system, 5, 10, and 15 points. So I got the 5 point, I got the 10 point, but then at that point, what does the trading system look like if I left the original 7 point risk on and I hit my first 2 targets, but stopped out, so I got 10 points, but then I lost 7 of that. What would that look like? What would the expectancy of that trade be over 100 trades? We don't have our win rate yet. That will come later. But for now, we can assume a 60% win rate simply because that's going to be very close to what you need in order to be profitable. So then moving forward, what would my system look like if after I hit my first 2 targets, I moved my stop to break even? And then you test those. That's going to increase your performance dramatically. Okay. Then what would my trading system look like if I hit my first target and then move my stop to break even? So there's a reason why I don't, after my first 5-point target, I don't move to break even, because I was getting 5 points, getting stopped out at break even, and then the trade would ultimately go for 10. So when I take a 5-point first, the way I see it is I've just reduced my risk on the trade, but I'm still vulnerable. Then that's how I built my trading system. You know, that's one of the ways I started building it out. And so I needed, because at the time I was hyper focused on being able to achieve, like, stay in a trade for longer, right? The focus was to trade less, was to have maybe design a system that was based on a higher time frame that gave me no more than 3 or 4 opportunities a day. That would allow for mental recovery. You know, scalping can be very, very mentally taxing. At least that's the way I feel. So, okay. So, moving on. So then I had to find supports. I had to find areas to trade that had a high probability of hitting at least the second target. Because if I enter a trade on my trading system, and say I enter here at 75.50, and my risk is 75.43, 7 points. My system, the areas that I look for have to have a high probability of giving me 10 points. And so currently my system has a probability of hitting the 10-point target 60, like last time I checked, it was like 66 or 68% of the time. That on the 10-point target. The 5-point target was in the 70s, 70 over at 71, I think. But remember that if I hit the 5-point, that doesn't make it. If I hit the 5-point and then it stops me out, it's a busted trade. It's just a less of a loss. And then my system hits the 15-point target like 36% of the time. So I know, and we can talk about holding that for longer, but so those are kind of like the outlines. I had to devise a system that got me to that 10-point target. That was the goal, right? 3 or 4 opportunities a day, get me to that 10-point target. And then, I'll see what the runner does. But if I'm trading it clean, I love when I see on my statement, when I see trading ES, I see 250, 500, 750. I love that because I know I traded it super clean. I took the entry, I took the scales, I got out. That's a standard trade. That's a good trade. But what I started to realize that with these areas, sometimes you can get a little bit more, and then I started optimizing and so forth. So yeah. Again, the idea was to build, to get to that 10-point target. I also know that if I can get to that 63% 10-point target, what the trading system is going to yield in terms of dollars over the course of 10 trades, 50 trades, 100 trades, assuming, because now I have the number 63 or 67. I have to look it up. It's on my laptop. 63 to 67% of the time, I understand that that is going to yield X amount of dollars. Well, then I need to go look back, and then I went back and I looked at, well, how many times am I being just straight wrong and just getting completely stopped out? And is the system profitable based on those assumptions? So when you're trading the market blueprint levels, understand that I wanted you to understand the architecture behind the levels. I'm building them so that they can get us that 10-point target. That's really it's really about, that 10-point target. Because I know at that point, if I'm trading 3 contracts, that my system over the course of 100 trades, I'm going to have a net profit. I hope that makes sense. Again, I think it's super important, and that's one of the things I'm going to discuss tomorrow, is having more of a how can I say, more of a structured approach to this. Because not only does that, it adds so much in terms of clarity, right? So going in that, hey, I'm going to lose 3 trades out of 10. So when you take a loss, you're really only hot under the collar if you took 3 losers in a row. But that should get you really excited because a winner's coming. But before we can get to that mental framework, we have to first establish trust within ourselves and in our ability to execute that structure. And so one of the ways that worked for me, and I think that this could be helpful I hope it's going to be helpful to many people, is you don't have to approach it from I'm not disciplined way, or discipline is not something, nobody's born disciplined. I'm sorry, it's a fallacy, right? No one comes out of the womb with discipline. It just doesn't happen. Discipline is developed over time. You could be very disciplined at eating cake, or you could be very disciplined at, I don't know, doing heroin or something like that. You could be very, discipline is a conditioned behavior. And so how do we condition our behavior? Well, through repetition. So if we can desensitize some of the trading, some of the pitfalls, the emotional impacts of trading, right? Think about how finances. I'm thinking of the Kahneman book, Behavioral Economics. But if we can reduce the emotional impact of wins and losses, again, we adults come into trading with a lot of baggage, right? So there's we have families to feed. We want to have that feeling of success. We want to be capable. So, ego gets involved. So we want to have all those needs satisfied. However, if we come into trading and we, instead of thinking that discipline is a God-given gift, if we approach it from a standpoint of discipline becomes anyone through repetition, then just tell me how many times I have to do what to come out on the other side as disciplined, right? And so then when we have a more systematic, more methodical approach to developing discipline, it allows for errors, it allows forgiveness for mistakes. In fact, they're implied that they're going to happen. But also implied within that is that as time elapses and the repetitions increase, those mistakes become less. And that's the goal. So following a rule linearly like a robot is not a requirement at the beginning. It is the goal that gets developed through repetition. So then where are the reps? What are the reps, Manny? How do we get the reps in? Well, we design a system first, like I just showed you. What time is it? Not ready yet. I wanted to see if I could buy this here. So we design a system. So we get an outline. We get the structure first. We build out the structure. We analyze a trading system based upon I designed mine based upon my personalities. I didn't want to trade a lot. And so I wanted to have a few opportunities that I was good at, and that gave me breaks in between. I didn't want to sit at my desk all day, and so I designed it around my personality. So once you design a system and you have a baseline of rules, then you can start practicing the repetitions. And when you give yourself time, say whatever, loosely, but allow yourself time. So the way I did it was I gave myself 3 months. I said, you know what? I think it was based on something at the time, but it probably had to do with it required, in order to become a proficient or an expert in anything, it requires 10,000 hours. And I think I did the math on how many trading hours, something of that nature. 12 weeks was the number I used, and that worked for me. So then you give yourself that time, and then you start, part of that is methodically, following, documenting, right? What are your struggles early on? Because you want to look back at your week 1, week 2 struggles. You want to look back at those in week 7 and see if you've gained any ground on them. And that advancement, taking those notes and knowing that you're going to be a train wreck at the beginning, and then in week 4 or 5, and you start to see those little incremental steps that maybe you couldn't see because you were too close to it on a day-to-day basis, those become the fire that burns your motivation to get you to the next step. And it just kind of starts feeding on itself. And then the repetitions become fun because you start to see some return on it. And then, you know what? Holy shit, come out on the other side 12 weeks later, and now people are calling you disciplined. And so it's just a different approach. That is what worked for me. I followed that very same thing I'm discussing with you now. Back in, I think I did it in 2014 or 2015, and at the time, I was joking with my wife about, it didn't come about all. I can't own it. It wasn't all me. Interestingly enough, my mentor, one of the mentors that I had at the time, I really wanted her to teach me, and so she gave me this task to follow. And honestly, I think she thought I think she was like giving me a task, and she didn't think I was going to follow through on it. But I was so tired of losing Like I had lost, I was losing everywhere. So I was, and I can give you, as an ex-athlete, I could be a little bit competitive. So I was like, you know what? I'm not going to lose this one. This one I can control. This has nothing to do with the market that tortures me on a daily basis. And so I committed to it and came out better on the other side. And so hopefully I can share that with you all and help at least someone turn the corner, or even look, nothing is profitability. Ultimately, when when you've been around this for a while, you understand that how much you're going to make is largely out of your control. It totally is. But what we can do is, this is why I love Danny's stuff so much, because what you can do is you can find a sense of peace, because those cortisol levels and getting the stressfulness of wanting to perform and not performing, that stuff can build up over time. And I think that trading, a lot of you know that I'm a baseball coach, and I've coached performance athletics for a long time. And I think that so much of trading is very similar to like a performance endeavor, to a single person sport like gymnastics or golf, or even, let's say table tennis or chess or something of that nature, because of the mental, because of the ambiguity of it on the other side. We have to build certain disciplines, mental disciplines or mental constructs that need to be built without the brain being having certainty. Our brains crave certainty, and that's the one thing that the market can't provide for us. We're just chopping around here at sorry, I jumped on a huge rant there, guys. Price is just chopping here at the lows. I think we're coming into that time frame too. But yeah, I hope that makes sense for you guys. I hope that can help out someone. If I can help a trader find peace in the peace, I think that's worth it. I often, you'll often see in our space that there are a lot of people. That there are a lot of. I'm gonna grab some here. I might just scalp this, but I'll probably do it micros. Just following that certain pattern that we discussed earlier. Let me just take a look at something. I'm not in yet, but we'll see. I don't know. Yeah, we're testing like the lower portion of the initial balance. We've kind of now. You know what? Let me see. What do our internals look like? If the expectation is that we stay into balance, that you want to be a buyer, you want to be a buyer at the edges, and you want to be scaling into the middle, right? I mean, I'm just kind of going over it to myself. Let me look at the internals. Let me make sure I'm not swimming upriver here. Internals are positive. I mean, AD is flat, but it's positive. Let me go ahead and grab one here. I don't know, 49.50. Let's see what we get. Grab a few more. Okay. Yep. So I know I'm not swimming upriver. I have got time on my side. Let me get the account up. Yep. All right. Coming into the 5-point target, if I can get it out there quickly enough. Boom. +5 on the first. Not expecting too much more of this. I'm almost willing to take 2 off at 5, just because of where I am. Look, I'm right at the volume point of control. Let me make sure I get the offer up at 60, just in case it spikes on me. Make sure that I get out quickly. I don't think we're going to traverse the entire range right back to the upside. However, we just heads up, we just put in our low tick of the day. The tick has been oscillating in the same range, like -400 to +200 for about 24 hours. And it just printed down to, which is not even low, but it broke the low range down to 550, 600. So let's see if that leads to anything. NASDAQ is chopping, going sideways in what looks like a 15-minute bull flag. And the Russell is in the same type of formation. It had a strong rip to the upside, and it is now in pullback. See what crude is doing. Crude looks like, yeah. So I think crude is a good one to notice, because just from one glance at the hourly on crude, you can see that looks that's a bear flag. It just had a bear flag from Sunday night into yesterday. You can see the consolidation sloping upwards, and then it broke lower. Actually, it retested the low, and then it found support. So that's a failure of a bull flag. Maybe I should cover that, since we were talking about bear flag failures, right? We talked about that earlier today. Let me just manage this trade, because I think right now we can see that really, really clearly on the crude chart. Yeah, I'm gonna glance over there. Let me just get this next target. I feel great about that. Oh, really? Well, what's this high right here? That last 5-minute high was 59.75, and that's a 15-minute high. Again, I'm willing to be super flexible on this, just because of the nature of the day. Internals, the NYSE internals are negative, 1.1 to 1 negative on the NYSE, 1.5 to 1 positive on the NASDAQ. NASDAQ is reapproaching its highs. Russell is in a pullback. 10 years up at 4.6%. Who cares about Bitcoin? What's NVIDIA doing? NVIDIA, oh, got it. Plus 10 points on the, plus 10 on the second, guys. Sweet, sweet, sweet. Well, I have a new one. Just downloaded my new one, my new Ric Flair. I like that one. For any of you 80s wrestling fans. Oh, hey, let's cover that book, that bear flag. And so this morning and in the market blueprint, I wrote about a bear flag and why I love to trade their failures. And this is an excellent opportunity to go into that, right? Because it had one on Sunday night. Here we go. Right? Let's get into this. Let me clear that out. I've got my stop in at break even. Let me just double check that. I'm going to let me just get my target in at 65. It's supposed to be 66 on the ad. So the ad, 51, I guess. 51. 66 would make it a nice, would make it a 3 target trade inside of the day's range. That would be, I don't think that's going to happen. But let me just double check this. Mixed internals, we're still in balance. Expectation is that we're probably going to trade somewhere up here at some point and then stay in balance. Maybe we go, perhaps we do something like this, right? Let me just get some room on this. But we could easily do something like this. Up, down, go up, and then close somewhere around here. Just like we could do it on the opposite end too. We just came back and double bottomed right here. So there's definitely buyers there. That market blueprint level was solid. Market blueprint level was really solid down there. Really solid. Okay, so let's discuss that. Let's review the crude oil, why, and I can show you why I love trading bear flag failures. And before I get into that, let me just run to the bathroom really quickly. Hang tight. In fact, I'm going to get something to drink also. So let me share this with you. This is going to be part of tomorrow. For anyone, I'm not sure if anybody cares, but just keep you company while I
If you're a trader, you know the feeling.
$62 quarter went high. All right, screw that. I'm gonna use the bathroom. I'll be right back. Hey y'all, looks like I was stopped out on the last one. Oh, I left the target in there. Let me get that out. So I'm done with that account. I'm gonna go ahead and lock that one out. All right. Hang on, let me get this up first. Let's see. Yep. Okay. What I want to do is log into this. Okay. All right. I'm going to discuss the reason why I love trading bear flag failures. They're better than the continuation. They're better than trading the traditional bear flag pattern. Hang tight. Crap, I forgot to turn. I had this on and it didn't trigger. All right, so here, guys. I just want to walk through this, right? So here we have a classic bear flag pattern. Okay, so here's a bear flag. Let me pull up an image, just like a standard image on the internet, so that we can see what that looks like. So you guys have a reference. Bear flag. Let me just draw it out. So a bear flag looks something like this. You'll have a pole, right? It'll usually coming down through time, right? And then you'll get this move where it comes up, and then this will be a support line somewhere in here. And then the idea is you trade the break here. Let me see if that's right. Hang on. Yeah, okay. So here's just a classic bear flag pattern, okay? Bear flag or bear pennant, whichever the two, all right? We'll leave this up here on the side. Oh, I can't leave it up on the side, but you get the idea, all right? That's you'll see it here. So here in CL, we can see that we got that on Sunday night, it consolidated, and then we had the big drop, right? This is a 1 hour chart, and then we had the big drop for the pole, and then we consolidated upwards. Then here on the retest, it failed. So now you just on this hourly chart in a really rudimentary way, a good entry would have been confirmed. Oh crap. Let me just redraw that. Bear flag, up, down, up, failure, This is the flag. This is the flag. This is more like a pennant. If you do it like that, right? But here's the entry, because you broke out on this bar. You broke out against the most recent local high. And then you would have been entering long on this bar here. Let me maximize this so you guys can, let me see how that looks on the screen. I want to make sure that this gets across. Let's see, I'll redraw it and I'll try to get it to a more maximized version of it. An hour through the 30 minute. Okay, so bear flag pattern is what we're discussing. Here's your bear flag. Down. Down. Up. Down. Up. Down. Got the lower high here, right? So this is probably looking like, hey, this is a lower high relative to this one. So let's look for the break, right? So if we get a break of these lows, it will confirm. But I like to look for it like this, right? I would have been looking for the break on the upside, because I know that this pattern is I just prefer to trade it on the upside. And so on this bar here, I'm sure a lot of people got caught because it's looking like it just got rejected from the previous high. But instead on this one, it reversed. And look, our moving averages rolled and pinched and started expanding higher. I would have been in on this bar, or maybe even this bar here on this pullback. That was a decent trade. Maybe I should start looking at crude oil. That's not a bad trade at all. It's not a bad setup. Rev often says that it is very technical. Man, I'd like to get Rev in here again soon. Let's see. Okay, let me circle back here, Terry. Hang on a second. Oops, let me get this off. All right. Let me just make sure I have this right. Where's the 810? The 810 is up here. It's looking for lower price action. What time is it? It is 11:15. Nope. So I would be willing to trade the A7. Okay, so let me just take another look here. Yeah, this is just top inside of balance. NQ looks like, yeah, you're right. Let me get an NQ chart up here. I need to have this as ES up. I'm gonna get NQ. Okay, here's NQ. I'm gonna change this. No, you know what? Let me do it this way. Bring this back to ES. And then put NQ here. Yeah, that makes more sense. What time is it? All right, 11:15. Oh, you know, hey, oh, sorry about that too. Hey, I just realized that sorry if you're on social, if you're checking in on hi, if you're just checking in on socials, sorry about that. The link is in We have a private chat community. The link is in the description. But if you're just joining us on Manny, we're building out the morning game plan. Every day we talk technicals, we review action, we review the live market, and we trade live setups. So we're tracking the yes right now, and we're looking at this balance area that's been forming for the greater part of about 24 hours now. It started yesterday at about 12 noon, and we are now been in a 24-hour balance in the overnight session as well as into today's RTH session. And one of the things you're going to see about ES often as that happens is after such a thrusty vertical move like that we just had, oftentimes the market needs to consolidate and it needs to gain its breath, right? What that does for us is that allows momentum oscillators to kind of cool off. I know the RSI on the ES was really, really extended yesterday. I wrote about that in the blueprint, and I think that now it's really cooling off. And you can really see that. Let's just take a look at the 4-hour chart time frame. Yeah, you can see we went from an 82 reading now to 66. This thing is raring to go. Any retest down here at 50, and if you're at a support, that would be probably a good opportunity. This morning, so what are we tracking? So thus far this morning, we've had, let me just double check this. Oh, didn't get a trigger there. Okay, so thus far this morning, we've had the market opened and it traded lower just at the open. It swept the overnight low. Okay, it swept the overnight low, came in at about 77. Let's see, 77.47 quarter. The market opened at 77.52. It then swept lower, looked below the overnight low. It put in this big buying wick. Let me just maximize that for you. It put in this big buying wick. It found buyers. It was rejected from auctioning lower, and thus the market it traded higher. It tested the higher portion of our 24-hour balance area. It tested the higher portion of our balance area. We had traded a long trade from our pre-planned setups into that high, and now we tried it again here. We got 2 fills out of it, 5 and 10 points, but the third target closed at break even. And so now we're just monitoring the auction to see if the price is going to really stick and trade lower and see lower prices, or if there will just be a return to balance. Again, we have to assume that this is a balance area until it's not. So let's watch this area very closely and see what we get. All right, coming down into our support, we have a fib cluster of support. Coming down into 77.38. Trading it as low as 77.38. Let's get a look at the volume down there. Yeah, that was pretty. This is interesting, huh? Just press lower. We're coming into a pre-planned setup zone, so we'll see what we get. I'm probing it with a small long with a 3-point stop. I don't like it though very much, to be honest with you, but I do have time and I do have price on my side. You know, I'm right at the upper edge of it. Yeah, I don't like it. I'm out -2 ticks, -2 ticks. Okay, great exit, Manny. Good job. Great. Let me see. Oh, okay. So now I have a valid area. I have valid time. Let's give it another shot. I'm giving it another shot with a small 3-point risk. I want my risk right below that low. I don't want anything to do with it if it comes back below there. But again, this is a pre-planned setup for me. So I'm going to go ahead and give it a shot. Hoping to get an opportunity to add to it if it starts working. But for you guys watching here, let me just get this up here. Thanks, Bruce. Yeah, I have to, just no thinking, right? Looks like I'm going to get taken out here. Yeah, it's coming in too hard. I might have to try it again, but my timing's off on this, I think. All right, taking out -3. No harm, no foul. I'm glad to step away there. Graceful exit. Paid for some information, right? Paid for some information. This market is not interested in maintaining the balance. So let's take a look at something here. That was a perfect opportunity for it to roll, for it to auction higher, right? We had a support. We had a support. We had a support. And the balance area broke lower, but it went into support. And then we had a delta divergence with only I think it was 11 contracts at the low. We had a low. We were in low ticks. So now that what I'm going through right now, what you hear me talking through was my timing just off, or is this a true break from balance? Right? Is this something that I want to get short into, or are we just going to go back to balance? So I'm looking at the weighted AD, and it's kind of sloping downward right now. While the normal AD is slightly negative 242. All right. This low came in pretty aggressively with 100 in contracts, 2x2 on each side. So that does not look like that area. That is a poor auction. And you can see here that the delta up in the left-hand chart, it's split, but the delta is more negative than it is positive, meaning that every time I glance at it, it is flashing red. All right, let me get that customized. So just so that it has just the delta on it for you all, so that this way it's a bit of a cleaner read. I like to have both on there because the split panel, what that offers me is a dual look. It gives me how many contracts are being added Sorry, how many contracts traded versus how many contracts hit the bid at market, how many contracts hit the bid at market buy, market sell. So it's kind of like, it helps me. You can see here how we're getting, and then the right side is the delta. So you can see right now it's blue, but on the way down it was pretty negative. Let me just keep it up. Let me just watch this very closely here. Yeah, gosh, this is pretty interesting here. Let me try this again. Let me see these momentum oscillators. Yeah, we have a momentum oscillator divergence. I don't know about this. That break lower, that's troublesome. Just being straightforward, that break lower is very troublesome. I don't like it. I don't like it at all. Let's see if I can wiggle out of this. I don't think this is the low here. I may get an opportunity just on this divergence to wiggle out, but just keeping it solid with a 3-point loss. Yeah, I'm done with that. So those two trades, negative $300 plus commissions. Not happy about giving this market a penny. All right, I'm gonna go ahead and close that one down for the day. Look at this. Now you go. Perfect. Yeah, thanks a lot. What was it? 77.36. I'm not doing that again. I think the better question is, do I take the A4? I don't know. Take a look at the NASDAQ. What the hell? Is that really the NASDAQ? What am I missing? Jesus. Yeah. Maybe I might try it again. But let it. YM's pretty red. I'm not, I need to get YM up here. I don't need that. Let me get the YM up. Every time you mention it, I always think to myself, why aren't you looking at the YM? Oh, wow. Yeah. That's a pretty gnarly dip. Get that on a 15-minute. Okay. Now, these markets are all divergent. That tells me that we're probably going to go back to balance. They're not in sync here. So here's what I'd like to see. I'd like to see one more flush. I may not get it, but because I do have a support area. Gosh, you know what? So wait, I took 2 3-point stops, right? Should I just have given it to 7? So probing contracts, I usually keep them at like the 3-point loss, because I might have to try it again. So then if I have 2, then I'm at a 6-point. I'm still not at a full 7-point stop. But so maybe if I get something like this, I don't know. Yeah, I should have just gave it the stop below the low. But I did that once. I did that at 77.39. I don't know. I guess it's just not meant for me. See if we can get that type of setup. So where's the low? Right. Sorry. See if we get this. We just redraw the whole thing. That's the low. So say we come down, pivot, go up. I don't think I'm gonna get that. I think that's it. So if that is it, if that is true, then my entry would come on a retest. So if this low is true, if this low is to hold, right? I want to make sure I get an exit. I want to make sure I get an entry right near my exit, 77.36. So I'll be looking for something like a retest, right? That looks scary AF. That comes right back into this low. But that's repeating the same trade I just took. Yeah, I'm gonna sit this one out. I'm nice and green. I'm going to avoid that. It's not meant for me. Well, let me outline the idea in case any of you want to trade it. So it'll be an inverted hammer. You can see it's printing that right now. And so on the retest of this low, I'd want to try it to see if this low is true. Right now you're at 77.37, right? It looks like it's coming down pretty aggressively. I think we get the first option where it tests and then it sweeps. It sweeps lower and then tests higher. You see what the delta is doing. Watch the delta up there in the upper left-hand portion of my screen. You can see it's already absorbing a little bit. So you see I came down, it was really red, right? And then as it got down to the line, it's going red again, right? You can see, yeah, they're pressing with that. Adding, stacking offers quickly. Yeah, I wouldn't pull the trigger on this, not right now. Not until this starts to equalize, and then I start to see it. So here's what another read of this is, see if this red, all this red, then pushing it lower, see if they can break it down. If they can't break it lower, right, all those market sell orders are going to what? Well, they're going to turn into market buy orders. Every seller becomes a buyer at a certain point, and every buyer becomes a seller at a certain point. So you see how they pushed it, and then now it's starting to balance out. Now the delta's starting to equalize. I mean, these guys here are trying to push it lower, and they're being super aggressive about it. I'm talking about this column here. I'm talking about the right-hand column. No, that's not it. I'm talking about the right-hand column only. So the right-hand column is how is the delta, how much they're hitting, not waiting for orders to fill. Instead, they're going market buy, market sell. So red is a market sell. That means they're hitting the bid. A blue is a market buy. That means they're lifting the offer. And then that would be the right-hand column. Then the left-hand column is telling us how many orders are transacting on the spread. So at the market. So when we use the both in combination, we can get a decent read for what is to come in the next 30 seconds or so. It's not, it's not predictive, but it helps me fine tune my entries. Yeah, look at that. YM's breaking. And the Russell put in a lower high and rolled over. Russell lower high, lower high, lower high. So look out. We should, let me see where am I at on the blueprint? Okay. Hang tight. 77.31. We are at setup the lower portion of setup number 2. And then, I mean, setup number 2 and number 3 were just so close. All right, you see that blue delta there printing, all right? It's getting aggressive to the upside. Let's see if that maintains. Again, one single read, one thing, looking at it once is not really going to prove anything. However, we want to watch it over time. Oh, Delphine asks, do you use Bollinger Bands? I love Bollinger Bands. I really do. So I used Bollinger Bands for years. I mean, maybe a decade. And I cleared them off my chart because I don't even know why I don't have them, to be honest with you. That's a really good question. I mean, I like them because they don't crowd the price action. And I don't use them with the moving average. Do you use them, Delphine? Yeah, I don't know why I don't have them. That's a great question. I mean, they're good for profit takes. They're also good for spotting exhaustions. What is the period on Delphine? What was the standard period on those? Like 2 and 14? Okay, thank you. No. Wait, that's not how I want it. I didn't finish that. It's 11:38. Can we get to 12 o'clock time frame? I think that's the right color. And then I'm on it. It might be a little too light. Leave that for I'll play with it on later at lunch. All right, so heads up here. We have to be really cautious because yesterday, no one was expecting the market to break lower, and that's exactly what it did. It liquidated a lot of longs, and right now we just had so we were monitoring this balance area. And this is a breakdown. We broke lower. We broke lower. We came back up. Tried to reclaim the low right here. Thus far, it failed. And then it made a new low. We do have a support here. Well, I'm just wondering if there's like some type of clandestine profit take, where dealers and market makers are just taking profit. There's one thing that it's probably too late in the day to get into, but largely what we saw in the last 2 days on the run up was simply a gamma squeeze. that there was no new money buying in stocks in the market yesterday. Oh, sorry, Tuesday and Monday. All right. Yep. Look at that. Follow through to the downside. Yeah. So guys, we need to. So remember, I'm not sure if you guys are still here, but I know it's lunchtime. I've got to go pretty soon. But do you recall this morning what I mentioned about the pattern? Let me know if this is. I see a lot of people just tuned off of. I guess everyone went to lunch. But earlier this morning, I highlighted that our pattern on this day type looks like this. And that we needed to analyze the relationship of these lows and this high. We needed to see a high. In order for the pattern to break out, we wanted to see an afternoon high that was higher than the AM high. That did not happen. We got a lower high. So this pattern is underway. And that's the magic of the clock. It can give us that idea for how the pattern may develop before the day starts. This is be careful here. You know that we're at the support, right? We don't want to get too bearish here when we're still at that setup. We're right at setup number 2 and the setup number 3. Okay. We've got 5 contracts traded at the low 77.3250. Look at the delta. Let's measure out the risk here. Oh yeah, that's asymmetric for me. That is a good asymmetric opportunity, right? Let me clear this up and put it in a way that's a little bit more readable to everyone. I got 2 on right now. I'm going to probe it. I'm going to try to add, but again, valid setup. And here's what the setup looks like: 77.36, 37. So you're going down. If you're all right. Let me just make this for current price. But I want everyone to see the setup and see it just keeps going higher. God dang it! Good. I've got 77.36. Let me get it up. So many things to monitor here. Nope. Yeah, hang on. I can't answer that right now. Go see mom. Okay. All right. So looking for, let's get an OCO in here. I'm going to put my stop in below the low. I have time price on my side. Valid setup. Pre-planned area. 36. 46 becomes the 10-pointer. Always need that one, right? That's what makes the juice worth the squeeze. Got some ground to make up. So we're looking for 50, 150 on the second. Not sure if I get it. I want to take a look at these internals also. I want to try to see what we're going. Here's what this is where this is what's going to make or break the day. So we have this declining, sloping 5 EMA up and the 21 EMA. The volume weighted average price is up to 77.54. If these break, if these declining, sloping, moving averages, the 9-period EMA and the 21-period EMA do not hold price down, then I'm going to be looking for a return to balance. Okay, so that's been highlighted right here by these two guys. This one and this one. And we have this local high right here. That's the first need. We need to get those guys out. That's 77.4450. We're going broaching it right now. If we can get above, we're already above the 9-period moving average. Oh yeah, got it. We're moving higher, guys. Bro, we just got the first need at 44.50, and we're extending higher here. Delta looks solid. Price looks solid. Again, spotted it really quickly at the low down there. We had 77.3250 come in at the low with only 5 contracts traded, and Delta flipped. It was just, those are the setups, man. Those are the ones you got. I live for. So let's see. Still a little bit short of that 10-point target. I did not take a 5-point first. Okay, so Bruce, we're coming to save you, bud. So this is the expectation. I really wanted to get this 10-point target on the first, but it doesn't look like I'm going to get it. We just traded against yesterday's low, and it's retracing. So I don't know if I'm going to get trapped here. I'm going to go ahead and take the 5-point first. Okay, got one off for plus 5 points. Okay, look, we're eating up the wick. So hey, here we come for you, Bruce. Look, we're eating up the 5-point wick. This is a really, really good signal, team, right? So when you see on this 5-minute chart, again, a big tell right here, right? When you see this 5-minute chart, leave that selling tail. Got it, 10 points on the second one. All right, when you see this 5-point chart, leave this selling tail, and we open, and it doesn't even tick one tick lower, and it's usually going to eclipse the high of that selling tail. All right, so here we go. I'm going to look to, man, I wish I would have held tight on that 5-point first, because then I would have taken 2 off on plus 10, and that would have made up for those 6 points I lost earlier. But no harm, no foul. It's that constant math you have to Thanks, Delphine. Yep. It's like a stacked candle. Here we go. All right, so here's the next need, right? So we need to reclaim what we need. So we reclaimed yesterday's regular trade. Let me just get this so you can see. So yesterday's regular trading hours low here, right? That's what we're negotiating right now. Look at that retracement, gnarly. That's a pretty. What time is it? 12:53. Oh man, I don't like this. That's a pretty gnarly retracement right there. It hit the 21 and then pulled back. Tighten up, tighten up, tighten up, because you know what? I honestly, I don't. If they stop me out at break even, so be it. I'll buy it again at the low. If they come and retest that low, I will buy it again. I saw what happened down there. Forced negative delta, like they always do. This is what happened on the decline. I got into it and just really got into the weeds with it. And hang on a second, let me watch this. So look, what happens when sellers are aggressive, but price all of a sudden releases lower? Hang on. I got taken out. All right, no harm, no foul. Let it get a little bit lower. I'll take it again. But we're going into that time frame. Let me just think about this from a pattern perspective here. This is that selling wick. No, that's not encouraging. Let me just see. No, yeah, I would trade that again, but I'm not going to overtrade. It's 12 o'clock. It's past lunch. I'm not going to do it. I'm locking it down. But what happened I was looking at the data on the decline for the low that was made on July 29th. And that was it wasn't like an exit in terms of a large liquidity sell. It looked more like they just forced a lot of. There were a lot of calls in the market. Oh man, I might scalp this again. Yeah, why not? 77.36. Nope, I'm out. Minus 3 ticks. I'm done. It's lunchtime. I'm gonna lock it down too. Locked out. NinjaTrader now has this new cool feature. You can lock your account. So before the July 29th decline, there were so many long calls in the book. Like it was just so stacked. And yeah, that's a gnarly print. That is a gnarly print. You got it. The pattern is underway here. I thought we would have returned back to balance, but remember the pattern I discussed this morning, it's underway here. S2H, right? We got the high, we got the lower high. This is the one I outlined. And now remember that we want to see our afternoon lows relationship to the mid AM low. And now our afternoon low looks to print as a lower low. Okay. Not even. Hey, that's so the typical pattern is this one. AM high, mid AM low, lunch high, afternoon high, last hour low. But what we're seeing is AM high, mid AM low, and it took out the AM low. So now the next trade becomes an afternoon sell for a last hour low. That's the one I want right there. I don't know, unless they salvage this and get it back to balance. That's what I tried that one. I tried that one. It didn't work. I mean, it worked for 5 and 10, and then smoked me on the ad. Yeah. Sorry about that, Bruce, man. Yeah, I get it. I get it. I was stopped out yesterday live on stream. I think, I'm not sure if you guys were around, but I took like 2 stops, and one of them was gnarly. Okay, good. Yeah, one of them was a gnarly. I think so. I lost 2 points on one, 5 points on the second, and then I lost 6 points or 7. No, yeah, so 2 points on one, 5 points on the second, and 7 points on the third. And typically that it's not going to bother me too much, but it just it was a trade that I probably didn't need to take. Again, I'm not going to let it get in my head, though. I'm probably talking about it too much. I'm not going to let it live rent-free in my head. That trade was yesterday. It's all ones and zeros on the screen. Not too bad, Terry. Hey, it happens, right? No worries. 1 point is not too bad. Hang out. So now my focus is going to be on the afternoon, right? Let's see if we can let's see what happens here. I like to give this a couple of hours to see if either they do one of two things, right? So here's what I'm looking for. We have that pattern. We came down. So I'm looking to ultimately, this is just really rudimentary drawing it out. I'm looking for where this high will be so I can get short on it. And then the risk is that we dig in, bulls dig in down here. This is all, and then all of these sellers here get trapped, which we know they love to do it. They love to force that negative delta and then squeeze. All right, that was what the July 29th low was about. So if they come back and they start chopping this higher little by little and then pop it, and then all of a sudden, it just fizzes out right back into balance. That's why I'd rather give it an hour or two to see where we are. For right now, I don't think they're done moving it to the downside. It's so important to understand those conditions too. Once those on January 29th, the strongest sell, everybody was, not everybody, but there were so many long calls, and then they forced the price lower for lower and lower and lower. And then once all of those aggressive call buyers were out of the market, and once those aggressive sellers failed to extend the low, the trade completely changed. It just completely changed. It happened midday. The traders who sold the breakdown, and they were so vulnerable because they flipped their positions from long calls to long puts, and then they were short calls, and the dealer book just changed so completely, and then they ripped it for the next 2 days. It was, it was epic. I mean, I'm sure they made. When you see the market rip like that, like the way it did, like 400 points in 2 days, guys, that was a windfall for someone somewhere. Just know that. talking hundreds of millions of dollars. Hang tight. I need to use the restroom real quick. They were good. They're cheap, but they're a little rough around the collar. Yeah, all right. I'll get it for you. I don't know. 77.27 quarters are low. No. Um, All right, just helping out a friend here who's got. My wife's friend has found herself with three flat tires. So she needs a tire shop, and that is probably, not. Those guys are. They give good deals, but they're a little rough around the edges. And so I'm going to go and give her a hand with that. Get her pointed in the right direction. Price is just going to probably chop for the next couple of hours. I mean, who knows? It'll probably have a violent breakdown here. All right, we had some solid trades today. I'm going to go give my wife's friend a hand with these tires. Who knows what happens this afternoon? I really do like that 2 o'clock time frame, but let's watch let's see where this low is. So let me see if I remember this correctly. Right. Well, we definitely have the 2H pattern playing out. We know that. Yeah, I'm going to talk about this a little bit more tomorrow at 1 o'clock, so I'll save it for then. But yeah, S2 days frequently have a trend-like move in the day. I'll get into it more tomorrow, though. All right, team. So I'm going to step away for a bit. Hopefully, maybe I'll come back on in the afternoon if I get back in here. I typically say that. And then what happens is once I leave the office, I have a hard time coming back. I don't know. I'd like to see if there's an opportunity here this afternoon. But I'll be watching in any event. I'm just watching my phone. All right, guys. So if you got anything out of this at all, thank you for stopping in. Thank you for your support. Hopefully I brought some value to your trading. Yeah. I don't have a problem doing that. Like my issue is that I'll step away, David. Like I'll step away now, like we'll run an errand, and I just won't want to come back. I'll come back at 3 or 4 o'clock, and then it's just like, what am I just if I'm here and I'm engaged, it's great. But if I don't leave, then I'll be here. But if I leave the house, I don't want to go back. But yeah, guys. So thanks everybody for your support. Hopefully you got something out of this session. Hopefully I brought some value to your trading. We'll be back again to do it again tomorrow. Remember, thanks, David. Remember, be patient. Let price come to you. And remember, like David said, detox. Take some time away. Go clear your head. Come back at it. One last thing before I leave, don't forget that tomorrow we have at 1 p.m. I'm going to be doing the live prop trader boot camp, and we'll talk about the execution clock and just talk about really how to get the most out of those prop accounts and really how to leverage those accounts and a structured set approach. A lot of what I discussed today is going to be included in that. I think that the reason why I spoke about that stuff was because it was so fresh in my head after working on it last night. So again, hopefully you guys, if you're around, stop by, grab some lunch, come spend the 1 o'clock hour with me. I think you're going to get something out of it. All right. Take care, guys. Thanks again. Trade safe.